What is up, everybody, and welcome back to another Indy Investor Pod. So excited to have the guest that we have today, my buddy Bo Kim, on here with us. So we're just going to be talking about kind of just how things go from investing when you're an out-of-state investor, investing in this amazing market here in Indianapolis, some kind of just tips, advice, mistakes, how do we learn from it, those types of things. And that's what we like to do on the Indy Investor Pod. We want to just take, one part of investing here in Indianapolis and really just kind of talk about the education behind it, learn from it. Hopefully we can all grow from it. That's the purpose behind it. And that's what we're going to do today. And with that, let's get on with the show. All right. And welcome back to another episode of the Indy Investor Pod, episode 32. I got my buddy Bo Kim here with me. He's an investor out of California, investing here in Indianapolis. So Bo, thanks a lot for joining me, man. How's it going?
Hey, how's it going, Brian? Thanks for having me. Very excited.
Yeah, no problem at all. So I'm definitely excited to just kind of pick your brain on here again, or just pick your brain in general. Just you and I have had a couple conversations, met a couple times over the years, and I was thinking about it before, as I reached out to you and said, hey, do you want to do jump on the podcast with me on the Indy Pod? And just thinking about that growth that kind of you and I kind of had over the last couple of years. I feel like first time we met, you were just starting to invest in Indianapolis. I was just starting to sell properties here in Indianapolis with simple wholesaling and things. So it's kind of cool to see that, like, the growth that we've kind of both have had and where we are right now. Not that we are all at all experts in any way or anything, but we've made some mistakes. We've learned from it, and we're in pretty good shape with what we're doing. So excited to just kind of pick your brain on here, what you're doing and stuff. And also, I'm going to throw this out here now, but definitely you want to check out Bo's podcast. He's the Bigger Cash Flow podcast. Just awesome stuff that he's doing on there with his podcast and stuff like that. So it's always good to have another podcaster on here with me as well. So
yeah.
So let's kind of get a little bit of your background. Kind of just maybe get into, like, how long ago did you decide to choose Indy to invest in, and then kind of where you are right now with what your investments are looking like, and how many you have, and just kind of your background of you picking Indy and getting into it.
Yeah. So I'm a buy and hold real estate investor located in Southern California. I started investing about 3 years ago, which is probably when we met, just right when I was starting. 2 months in, I was researching the different markets. Indy was one of my top markets that I was interested in. Flew over there and met guys like you, and that just helped, the ball get rolling. Right now I have about 61 units, and this is a mix of, I have some apartments, a 10 unit that I bought from you guys. I have a couple quads, duplexes, and mostly they're single family rental properties. Although I am a buy and hold investor, I recently pivoted and I started adding flips to my portfolio. So kind of getting that quick cash and creating additional capital. As you guys probably know, if you guys are buy and hold investors, it is a very capital intensive business. So especially with what's going on with COVID and a lot of uncertainty, I do want to create chunks of cash to help really stimulate my growth and buy back into the buy and hold space once there are better opportunities. So yeah, my strategy mainly is to invest in the Midwest. Not only do I invest in Indianapolis, I invest in Kansas City and Little Rock. So if it's cash flowing, it hits my criteria, my numbers, good economic growth, good job growth, population growth, then I'm going to be investing in there. So yeah, I'm in it for the long term, Brian.
There you go. So that's what it's all about. How much did you put into figuring out what markets you wanted to be in? So, like, when you picked Little Rock, when you picked Kansas City, when you picked Indianapolis, how much work did you put into kind of figuring out where you really wanted to be and, eliminating other markets compared to the ones that you did choose?
Yeah. So this actually might sound very lazy. I'm gonna be honest here, but I recognize that I'm not the smartest guy in the room, but I think one of my skills is kind of connecting the dots and building relationships with people. That's what I found to be my strength. So when I first started, I didn't know what I didn't know. So what I did was I identified people that I looked up to, that I knew that they knew what they were doing in terms of investing, and they had good fundamentals. So one of the guys, I'm gonna throw his name out there, Joey, he was one of the first guys that invest in Indianapolis that I connected with. And I remember this because I didn't even know him. I just hit him up on Facebook Messenger, I think Christmas Eve. And he responded back to me within like an hour or two, and we just hit it off. We started talking. We texted each other like daily. We even hopped on phone calls. He had about 22 units when I first started, and I had none. And he was gracious enough to show me the ropes, connect me to different companies such as FS Houses. He mentioned Simple Wholesaling. That's how I got connected with you guys during my first trips out there. So the reason why I say this is, for me, I don't want to recreate the wheel, because I know that there are smart investors who have already done this. So I connected with them. It's not to say that I don't do any due diligence. I definitely do my due diligence. I'm an auditor by trade. So I like to look at the financials. I like to look at my numbers. However, in terms of the big macroeconomics and identifying these markets, I probably came up with 10 or 15 that have been repeatedly talked about in the Bigger Pockets forum or these other investors that I networked with. And then I really filtered it down from there. From that point on, it was more like, okay, what markets do I like? What are the fundamentals that I like? And the most important piece of that, even if the fundamentals are there and I really like the market, can I get good deals? Is there enough activity? Because, for example, Little Rock is a market that I really love. However, I would say there's maybe 1/20th of the wholesalers that are in Indianapolis. That might be a good or bad thing, but the deal flow is not as strong as Indianapolis. So I naturally do more deals in Indy. So yeah, those are some of my reasons how I landed up in Indy.
Yeah. So let's talk about that a little bit, of just kind of some of your connection stuff, of you talking about you making connections with people out here. So you living in Southern California and investing in these other markets and things, how did you go about, I guess, kind of just helping those those connections? Are you doing a lot of just connections like over Zoom or on the phone? Like going out, how often are you going out and visiting um, just your portfolio or your people that you're working with there? Like, how are you managing that?
Yeah, so that was actually one of the things that I had to first figure out when I was starting out. But another reason why I love investing in the Midwest is that the time zone difference. You guys are already up and about by the time I wake up, right? So if I sacrifice a little bit of sleep and I wake up at 6 in the morning, I can talk to you guys when you guys are just starting out your day. So that's exactly what I did. For the first couple of months, as I was building relationships, I created a short list of all the wholesalers, brokers, all the property managers and contractors that I wanted to work with. And then I started interviewing them all. So we probably had a lot of discussions when it was 6 o'clock my time, trying to figure out, okay, is this guy a good person to work with, especially me being a newer investor, and a John Doe might be a good person to work with for everybody else, but it might not be the best fit for me. So I really had to go through that interview process. And then once I narrowed down my short list, I flew out over there. That's why I had breakfast with you. I had lunch with a couple property managers. And that really solidified my core four, which is my realtor, my general contractor, my property manager, and my bank financing piece.
Yeah.
So those four really helped me scale to the number of units that I am today.
Yeah, that's awesome. I really like what you said there too. And I think it's worth kind of stating again of, there were people that you wanted to work with, people that you connected with, that you felt comfortable with. I see a lot of times where people are just like, oh, well, Bo said this or Brian said this, so I'm just going to use that person and go with it. Things can go wrong when sometimes that happens, and we might give you some good advice in here and there, but going out and like actually talking to that person, making sure that you actually connect with them one-on-one, they're the person that you feel comfortable with, that you work with. I think that's really important. So, man, I think that's some great advice that you have for the investors out there, whether you're in Indy or, Colorado, California, wherever you are. I think it's just an important thing to do. Know who you're doing business with. So,
Yeah.
how about just when you, so looking at just kind of your investments now and kind of what you're doing, what advice do you have? I know, because when I met you, you were just first starting off. So let's kind of go back to that moment of like, what's some advice that you have for that person that's just looking to do their first like one or two deals? Maybe if you wish like, oh man, I wish somebody would have told me this.
It's a good question. For me, I think looking back, and this is a quote that I probably overuse all the time, and it's one of my favorite quotes by Steve Jobs. We can't really connect the dots looking forward. So you have to take those steps and trust in yourself that when you look back, those dots will connect somehow in the future. So for me, again, with the preface that I didn't know what I didn't know, I made sure that I'm taking consistent action, no matter how small they are. So I don't think I can honestly sit here and tell you that when I was starting 3 years ago, my goal was like, I'm going to have like 60 units in 3 years, or I'm going to buy that apartment building. I didn't even know I could buy an apartment building.
Yeah.
So what I did was I consistently started adding a little bit of, brick by brick knowledge. So that's what I would tell the investor who's just starting out. I know there's a lot of ambiguity and there's a lot of fog, but what you have to do is continuously take steps forward into the fog if you want to continuously, I guess, move and build upon your journey. So what I mean by that is, whether it be turnkey or if you're buying from a first wholesaler, start out small enough where a big mistake isn't going to ruin you. Like if something bad happens, you just lost it all and you can't invest in real estate anymore. Take calculated risk, but small enough where you can recover from it and pivot and change if the environment around you changes as well.
Yeah, I think that's really good advice, especially for right now. As going through this, everything that we did with COVID and just kind of things slowing down or people not being able to pay rent, that makes a difference. Of if you jumped in too early, you definitely felt it for what's going on now and stuff like that. So definitely great advice there. Let me kind of just ask you too. I feel like you've done, I just really respect kind of how you've grown and kind of the analysis and the thought that you put behind everything. What's something that you're really proud of so far, of kind of how you've handled your investments and how you've handled everything that you're coming into?
I gotta say, I'm definitely happy with the relationships that I've built. And I know it's a little cliche, but for me, it was really important. One of the, I guess, fundamental philosophies for me as it comes to investing is that you live and die by your property manager. And number two, you make your money when you buy. So for those two reasons, your acquisition and lead generation is going to be very important. The broker relationships that you bring in, or relationships with wholesalers, especially in a market like Indianapolis, you could be doing your own marketing and all that work, but if you just leverage the resources and knowledge of a well-solidified wholesaler, such as Simple Wholesaling, then you can get that deal generation and focus on what you do best, which is the actual rehab, working with your property manager to place tenants and just manage the property a bit better. So that relationship is very important. And then when it comes to property management, I think that's the most important. And I honestly got to say, I got really lucky. I have some friends. I did get burned in Kansas City. Don't get me wrong. I've lost $10,000 before by trusting the wrong person. And I think I mentioned this on one of the podcasts that we had earlier, but yeah, in Indianapolis, I got really lucky because my buddy Joey, he referred me to FS Houses. And ever since I started, I've been attached to the hip with Ryan and Ashley. And I've been just going along with the ride. And I've been just so fortunate that they place my tenants and they just manage it really well for me. So again, I think I'm really proud of the relationships that I've built. And I'm also really glad that I didn't really focus on the small stuff. So I think there's a book called Don't Sweat the Small Stuff. Yep. And it was a really quick read for me. And it just opened my eyes. In the beginning, because I'm an auditor by trade and I love the numbers, I was so into calculating, okay, my profit, what are my margins? If I get a contractor in there, man, this guy pays $4.50 per square foot. This guy charges $4, and just really doing that analysis. I'm not saying don't do it, right? You do have to know your numbers in your business, but I really focused on the big picture. So even if it's $4 a square foot or $3, whatever it might be, if it fits in my budget and I know he's going to do a good job and he's quicker than the other two, that I know overall I can quickly turn the unit, get somebody in there, and it's going to be a wash anyway. So I really tried to take a step back, look at the big picture. And it's really helped me tremendously because I feel like my vendors know that I'm an easy person to work with. So they bring me more business and I in turn bring them more business. And it's just a big circle of just working together in harmony that's worked out well for me.
Yeah, no, I think that's great. It's worth mentioning there, just kind of what you said of like looking at that big picture. Sometimes you might be able to go with a cheaper route here or a cheaper route there, but in reality, is your goal was to gain a portfolio. That's what you wanted to do. You wanted to build onto that portfolio and bring in units. So when it comes down to it, is hey, is it worth doing this one job a little bit cheaper, or can I build up this relationship? It might be a little bit more expensive, but I'm going to do 10 deals with this person, or he's going to work on 10 of my properties or whatever it may be. That's a big difference of just like, I'll burn this relationship to not necessarily burn it, but like, I won't build this relationship just to get a, quick buck here, or something like that. So that's something I think that's great to be able to look at. And like you said, just be able to look at that whole picture of really what you're getting out of it. But then still having that analytical mind and doing the analysis on what you need to.
Yeah.
So let's talk about it. Since you are an auditor, since you are, I mean, that's your mindset of like, hey, I'm into the numbers. I know that. How do you balance that of being more analytical versus like, hey, building the relationship type thing? How do you balance that act?
Yeah, so the underlying, I guess, assumption is that the deal first has to hit my numbers. And my criteria, if I really simplify it, is basically I want to invest in C plus areas, whatever that means for you guys. But for me, it means working class neighborhoods with a good rent to value ratio, near the east side, southeast side where I like to invest in. So in that area, if I can be all in at 75 cents on the dollar and cash flow about 150 to 200 a door, so basically taking all my money out and I can cash flow, then that's going to be a winner for me. So, whether I am 1,000 or 2,000 below it or 5,000 below it, I mean, as long as I minimally hit my numbers, that's going to be okay. I'm going to look into this further. Now, with that said, there might be some properties where I'm over slightly. There's going to be other properties that I'm under slightly. It's a plus or minus, but on average, my portfolio, I am able to burr out of it. And for me, balancing it, I can give you an example with Randy. So
Yeah.
last year, near the end of last year and earlier this year, I bought two single families from you guys. And the first one, I just had to negotiate a discount with Randy because of the sewer uncertainty, and it wasn't hitting my numbers. And you guys were willing to work with me, so I think we met halfway and we were able to get the deal done. But I did tell Randy, hey, on the next one, if there is a property that comes up and it hits my numbers, I'm not going to try to squeeze every dollar out of you. And I bought that at full asking price. So for me, it's relationship, because I told Randy, hey, this is what I'm going to do. As long as you do what you're going to do, we're going to continue to do business and we're going to do well together. And it's worked out tremendously, because I ended up buying a 10 unit from you guys, and that's been a good cash flowing rental property for me as well. So
Yeah.
I think
So
that's just an example of how, you balance that analytical mind with just making sure that the deal works for both parties.
yeah, and that's not it's just not worth it for anything. Hopefully, if you are investing, whether you're buying like through a realtor, direct from a seller, or a wholesaler, no matter who that is, whether it's us or somebody else, keep that in mind of that this is somebody that you want to build a relationship with, and they're gonna keep feeding you properties, of keeping those things in mind of like, hey, is it worth kind of like hurting this relationship over a couple $1,000s, or is it something you can build on and really gain from? And just having that open and honest conversation is huge. So let's talk about this a little bit though, just because you brought up the 10 unit. So how was that transition, and even just how was that analyzation process, that underwriting process of going from, where you're mainly dealing with like single families, maybe some duplexes. I know you have some quads and stuff, but then also going to a bigger, where you're not a huge, multifamily, but you're at 10 units, a lot different than a single family. So let's talk about that process of how you're like, number one, I was very excited when Randy told me like, oh, Bo's interested in this 10 unit. I'm like, oh yes, this is perfect for him. I love this. So how did you kind of like decide of like open your mind up to like, oh, I want to take something like this on? Or was that always in your vision, or kind of going from that process of going from single families to taking on something like a small apartment?
Yeah, so my mindset was that I needed to be a little bit more careful and I needed to do my due diligence, because if I make a mistake on a single or a duplex, it's just, one unit or two units. If I underwrite it incorrectly on a 10 unit, it's potentially 10 times the mistake, right? Because I need to extrapolate that based on the number of units. So I made sure I did my research. And by this time, I bought this, last December. So not that long ago, but it seems like forever with
Yeah.
COVID. But by this time, I already had some multifamily training. I had a mentor who helped me with the underwriting piece a little bit. And I have about 10 duplexes in Indianapolis, give or take. So I kind of understood what it means to underwrite a multifamily in terms of expense ratios, some of the things to look out for that you don't necessarily consider for a single family. So with a 10-unit apartment, I kind of thought of, okay, what else do I need to consider, whether that be the income from the laundry or how are all of the units separately metered, and underwriting all of the financials that are receive or don't receive from the previous owner. So once I got all of those numbers correctly, I had about 6 different scenarios. So I stress tested the income, I stress tested the expense, I also stress tested the cap rate reversions. A lot of brokers were telling me it's going to be like an 8 cap rate, but I wanted to know, okay, what if it's a 9 cap or a 10 cap or whatever it might be, because that's going to drastically reduce the value of the property. So once I did all of that, I had a number that I was comfortable with, and I went out to Randy, so excited. Hey, Randy, I'm ready to buy this property. And Randy said, sorry, it went pending. So I was like, oh no, I was too late to the game. But although I was bummed, I was like, it happens. I was just not quick enough, and I still had to do my due diligence. So I think a couple months passed, or a month passed, or something like that. And I was on the way back home. I was flying from, I think, Little Rock. And I texted Randy. I was like, hey, so how's that 10-unit going? Because I was touching base with him probably bi-weekly at that point, just to see how things are going. And he said, you know what, you got me at the right time, because the other buyer is not responding. So I was like, okay, I'm sorry to hear that, but let me know if things fall through. And he said, yeah, I'm going to give it another week to see if they respond. If not, I'll give you a call back. A week passes. I think literally 8 a.m. that day when the week passed, I texted him. I'm like, hey, so is it available? And he's like, it is available. Let's get the ball rolling. So we had a couple of discussions, and then I ended up getting the property. So yeah, long story short, I think the follow-up and the due diligence was really key for me in getting comfort over a new asset class. It's a different animal in my opinion, but fundamentally it was very similar in terms of how I stress tested and underwrite the property.
Yeah. So that's all. So you're like, you've owned it for almost close to, I think, 6 months or something like that now. So how's that been? Have you been like, oh man, it's going as I'm going, or what have you learned from kind of just that onboarding process of bringing that into your portfolio?
You know what? I can only say kudos to my team. Shout out to Josh Jenkins on the contracting side and FS Houses on the property management side, because basically this property was in heavy distress. As you know, it's like 30% occupied. And we had to ask one of the person who wasn't paying to leave and just make sure that we had good tenants in there. So FS did that from day one. And then Josh and his crew just went in there in the midst of COVID, because I really started renovating this, I think, end of February, starting March. And there was a lot of uncertainty. I was really scared because it's a $150,000 remodel. And I was just concerned that if Indy just shuts down completely, then I'm just going to be sitting on this at 30% occupancy, just paying the bills, right? But Josh was really well aware of that fact. He got in there really quickly, and I think they completed in about a month and a half.
Nice.
For 7 units, which is, for me, super fast in my opinion. All new flooring, new bathroom, newer kitchens, all new windows, new roof, all the stuff. So we got a really nice property, and FS Houses, once it was done, they've already taken it to 70% occupancy now. So we have 3 more that we need to tenant, but I think 2 of them was because we needed to turn it. So I think we'll be there pretty shortly, and the experience has been phenomenal for me, at least.
Nice, man. I'm excited for you. Yeah. So yeah, congratulations. That's good stuff. So I love it. Let's kind of, talking about that and stuff like that too, just kind of makes me think of, you're in some different markets and things, and you also live, completely out of state. You're not living here and seeing it firsthand and things. What are some things that maybe surprised you about Indy, or maybe, it could be like maybe a positive and a negative, or we won't call it negative. We'll maybe something that made you rethink things. We'll put a little bit more of a positive spin on that. But what's something that maybe surprised you about Indy, just as you've been investing here for 3 years now, of something that maybe you weren't quite sure of, or they just took you off guard?
Yeah, I guess from a market perspective, and I'm sure a lot of your listeners are already familiar with this, that Indy, compared to some of the other markets that I've invested in, is very street by street. Like in Kansas City or Little Rock, where I invest in, it's literally neighborhood like chunks where I know that, okay, if it's in Raytown, it's a C plus B minus area. Grandview, it's a decent area. But if I go to Indy, you can say, hey, this area, but some of these streets you don't want to invest in, other streets are perfectly fine. So that's one observation that I had with Indy. So you can't just really say, hey, zip code 46208, I want to invest here, or whatever that might be. So that was one of my observations. And then another observation that I had was, and this is probably me just living in the metro of LA, where, I am also in professional services. So I have clients emailing me all the time, and my days are filled with meetings, right? So when a client emails me, it's naturally assumed that I would respond back to them within 24 hours. And I realized that in the Midwest, things move a little bit slower. So just understanding that everybody has kind of like a different pace of when they're working at. Just as an example, I sent an email when I was just first starting out to a vendor that I've never worked with before. And I said, hey, I'm introducing myself. This is what I want to do. And then we had a nice discussion, and he said he'll get back to me. But we didn't really decide on when get back to me was. So 3 days later, I reached out to him and was like, hey, did you have a chance to look at it? It's like, hey, yeah, give me, so-and-so more time. I'm still looking into it. And it was kind of like understanding the cadence that, okay, at least maybe it was just for that vendor. Correct me if I'm wrong, Brian. I don't want to be.
I said, hopefully it's not somebody on my team.
No. I don't want to be offending a bunch of Indianapolis people right now. It's like, hey, Bo, we're quick. But yeah, just the pace of that, making sure that I align my expectations, right?
Yeah.
With my team. So
yeah,
that's been good.
And that's, and that really is important, because, that's how you're used to working, and that's how you expect to work. That's one of those expectations kind of you're putting forth of like, hey, when I communicate, I expect communication like back, pretty quickly. That's how I'm going to need to operate. That's how I operate in business. That's how I want to do business. So putting that stuff out there, and, putting the expectations out there for your team, that's important stuff. And that's something that you look at. But I'm sure that's only one of the small differences between Indianapolis and LA, but it's so no, other than the amazing weather, at least it's summertime out here right now. So we're running a little bit low on time here, Bo. So I really appreciate having you on here and stuff like that. Let's kind of just get maybe one more just kind of nugget or piece of advice when it comes to, I don't know, maybe even working with a wholesaler that's bringing you properties, or property managers bringing you properties. When you're looking at those people that are bringing you deals, those, and you're looking at those deals, you're analyzing those. What's maybe one more just piece of advice that you have to, whether it's how to analyze or just how to work on that relationship, or just kind of how to just look at those deals even a little bit more in depth to know that one is the one that you want? What's just maybe one more nugget that you have on that stuff, man?
Yeah, and I'd say when working with wholesalers or brokers who are bringing you leads, just make sure that you also get a second opinion if you're not well experienced. And my advice is that just underwrite so many deals, even on the MLS or other wholesalers, that by the time that Randy sends you a deal, that that's a winner, just because you can tell in that neighborhood for that price, for estimated rehab amount, it's going to become this ARV, right? And then you can spend more time on it. I feel like newer investors might be burning a lot of time on deals that's not going to pan out, where a seasoned investor can look at it in 5 minutes and know that it's not a winner.
Mm-hmm.
And then on that note, if you're not experienced, you got to go get some experience, right? And it doesn't have to be in the form of you paying a mentor or a mastermind and learning how to do it. There's going to be tons of people in the Indy Facebook group that Ernesto created, or even in Bigger Pockets. you can learn over the shoulder. So find somebody who's willing to give back to other investors. Email me. I'll be more than happy to take a look at your deals and share you my thoughts on it. Find somebody who has, I guess, no incentive or ties to that deal, right, to get paid, and they'll be able to give you their honest opinion. Because I feel like, wholesalers, they are trying to sell you something, if I'm being totally honest here. So they might think their product is better than what it actually is if you really, as an investor, get down to the details. So you really have to treat it like a business and from that perspective and stress test it. So what I mean by that is don't take it at face value in terms of the purchase price, right? Or the after repair value or the rehab, any of that, right? Everything is negotiable. You can discuss it. And if you become an investor who does more deals with them and brings in turn the wholesaler value or the broker value, you're going to be able to get a little bit more leverage in terms of scaling up.
Awesome stuff. So great advice. I second all that stuff. That's great. Of just, getting a second opinion, or some more advice on little things like that. And just because a wholesaler says the ARV is $250,000 and Martindale Brightwood, that's not probably the case. So getting a second opinion on stuff like that. No, that's good stuff. Bo, let me give you a chance to, kind of plug yourself a little bit, talk about with your podcast. When does that come out? Where can they find that? And then also, what's a good way for people to reach out to you if they want to connect with you or ask you a couple questions or something?
Yeah, so I'm pretty active on Instagram, Bigger Cash Flow. That's my handle. And I have a website called biggercashflow.com. You can also find me on iTunes, Stitcher, Spotify, where any of those podcasts are out there. I release episodes weekly on Sundays. I actually released a 7-part series earlier this year on starting from soup to nuts of how you can analyze a market, set your goals, underwrite your deals, and form your own team and scale your portfolio. It's a 7-part series. I definitely recommend that you guys check it out if you're just learning more about how to invest in Indianapolis.
So awesome stuff, my man. So appreciate you joining me on here and stuff like that. So Bo, thanks a lot. And with that is a wrap for episode 32 of the Indy Investor Pod. See you guys later.